Joining us now, Mrs. Surana, always great to speak with you. This time, of course, we've seen a huge forex hit on the quarterly numbers and some GRM pain as well. Talk to us about, first and foremost, the exceptional items that have been impacting you this quarter, and how much of that is on account of COVID?
This quarter as such had been exceptional because of multiple reasons. One thing was COVID pandemic. Other thing was the rise of war in the crude producing countries, abnormal rush for increasing or decreasing the crude production, etc. So there was a lot of volatility in the crude oil prices and the product oil prices, which led to a sharp fall in the crude prices, almost to $13 per barrel at some point of time. And then there was a quick recovery. It led to abnormal inventory losses during the quarter. Now, what you see is 1,000 crore of exceptional item. Basically, this is the inventory losses can happen because of two reasons. One thing is the inventory which you hold as of 31st March in your books of account, and that is to be valued at cost or the realizable value, whichever is lower for the accounting terms. So on this component, on a conservative basis, you will always be required to book losses if your realizable value is less than your procurement cost. But you won't be able to book the gains if the realizable value is higher than the cost, because it is the lower of it. So that's one element. Now, in this case, because of the sharp drop in the crude prices at the March end, the inventories which you hold at the end of March, that is to be evaluated at a lower price than at the cost. And so there is an exceptional item of 1,000 crore. Now that is only a representation in the overall profitability or overall inventory losses. This is included, but just for the representation, because this is not year-on-year item. That's why it is represented. The second element is there is a timing difference between from the time you purchase the crude to the time it gets processed, and then the time you sell it in the market. And the total from crude to product, there is a margin, but it has got two elements. One, because of the operation margin, because of processing, and second is because of the timing difference from the time you purchase the crude to sold the product. So the differential in crude prices from the time you purchase to the time you sold, that is considered as an inventory gain. So overall, there was an inventory loss of 4,253 crore in the last year. Even in the last quarter, Q4 itself, there was an inventory loss of 4,113 crore. Now compare this with the previous year, whole year inventory gain of 1,766 crore. It means just the inventory loss accounted for 5,500 crore, mostly during the last quarter itself. And that is one element, that is what is exceptional.
All right. Now, core GRMs as well dropped into negative territory this quarter. So what's the outlook on that front going ahead?
Just to correct it, the negative margin is a reported margin. The core margin was $9 because the inventory loss itself was $10.6 per barrel. So just to correct that. Yes, there are two elements. One thing is that the cracks had been abnormally low because the total demand collapse in the world over because of the nationwide lockdown on account of COVID-19 pandemic. So at some point of time, diesel and petrol cracks had gone even into negative territory, which we had not seen earlier any point of time. Now, after that, the cracks are improving. And as of now, if you see, the diesel cracks has already come to $5 to $6. The demand of gasoline is improving in US. The demand of diesel is improving in European countries. In India also, there had been a very sharp recovery in the demand. The demand of petrol and diesel, which has gone to almost 40% of the normal, it has already reached to around 85% of the normal, and we expect it to be in the range of 85 to 90% by the end of this month. So I will detail about the demand pattern later on, but coming back to the GRMs, with the improving cracks and with the benign crude prices, I think the GRM should improve. If you see the Singapore GRM forecast, that is also which was negative, and the negative GRM in Singapore, the benchmark with GRMs, it was not seen for almost long time. I think it is the 10 years lowest GRMs it has hit. But now the forecasts are positive, and I think that the same thing should reflect in the actual GRMs also. Just to for the information, the Singapore GRMs are daily crude and daily products, while the actual GRMs are based on the actual crude timing procurement timing of the crude and the actual product dispatches. So to that extent, there will be some something, but those gets are counted as inventory gains on.
Right. Mr. Surana, your marketing margins as well in the quarter gone by have remained weak. What kind of trends do you foresee from here onwards?
Where the prices were static for most of the period during the lockdown. Because at one end there was a complete collapse of the demand because of the lockdown condition, restriction of movements, etc. Except LPG, which was moving, the MS and HSD demand come down almost 30 to 40% of the normal. During this period, parallelly, there were also a lot of things happening on the crude pricing front because of the international scenario, the discussion countries, a price war between major oil producing countries, the initial disagreement on the anticipated cuts, subsequent agreement to increase the cuts substantially, then sudden drops in OSP by some of the producing countries. So there were a lot of events which were happening parallelly, leading to substantial spikes in the crude prices up and down both sides.
Right. Also wanted to understand now with the reopening happening partially, what kind of capacities are you working with?
Yeah, as you're aware that HPCL sells more than what we process in our refineries. So HPCL sells around 40 million ton of products every year. And within our own refineries, along with our joint venture refinery, we process around 29 million ton or so. So to that extent, HPCL was a little bit in an advantageous position as far as refineries go. So during the lockdown also, HP operated its refineries to Vizag refinery, we operated almost at 100% capacity, and the Mumbai refinery almost 85% capacity. And as of now, we are operating both the refineries at 100% of the capacity. Actually, it's a part of our strategy because we need more products than what we process in our refineries. It makes sense for us to process and keep the products rather than just.
Okay, what's the outlook on volumes from here on, Mr. Surana?
So as the relaxations have come in gradually in steps, starting from 20th of April onwards, the product offtake has moved. During the complete lockdown time, it has come down as low as 30% on MS and HSD, which moved to 60% in May, and now we have got 82 to 85% of the normal demand. So the petrol and diesel demand as of now is in that range, 82 to 85% of the demand which we had in the last year, the same month. As the more and more opening ups are happening in various states, then we expect it to touch around 85 to 90% by this month end, or maybe at the most by mid-July. Subsequent to that, it will depend on how the construction sector picks up, how the industries picks up, and after that it may be slightly.
Okay. There's also been a sharp hike that we've seen, of course, in petrol and diesel prices over the last 10 days. did a bulk of that move happen, or are more hikes not ruled out? Can we actually see more as well going forward from here?
It is day-to-day basis, and we need to see how the international prices are moving. So we can't say that this bulk is over and not over and get aligned. And as you are aware, there is substantial part of taxation from the central and state governments. During the last period, there was a hike in excise duty, then there was hike in VAT by some states also. The government has also got the compulsion for the resources, and during such time, they also need the resources. But as far as we are concerned, we are trying to align it to international prices, and if the prices move up, it will move up. If it moves down, it will move down. Right. What you are seeing is because the crude prices moved up from almost $10 in April, $10 in May. So that impact had to come. Only one question, one more thing I can answer probably, because the people may have confusion regarding the borrowings, because some people were asking me. So in the March end borrowing has got a component of short term and long term. Normally in March end we have the taxation penalty. So
all right, we'll leave it there for now. Mr. Surana, thanks so much for joining us this morning and talking us through all of the factors currently there for HPCL. We take a very quick break. Back in a moment.